What is going on with Starknet? What's moving the price? It's definitely not the usage of the chain itself, because when we look at the development, when we look at the transactions per second, there's not really any growth. Here's the TPS over time. In October 2 years ago, we did have a bit of activity, and yes, the chain isn't really dead, but there's also no real growth over the years. Yet the price development of STRK over time does speak a very different language, as in it's maybe not the usage of the blockchain that's driving prices. What we see over here is Starknet relative to all other smaller altcoins. So we are dividing the Starknet price by the others market cap. Others is all the altcoins that are not in the top 10. And since February of last year to September of this year, Starknet underperformed the average altcoin by more than 95%. But that then has recently turned around. We rallied from the bottom to the peak by 180%, from the bottom to today's price by 114%. And so really, what's driving the price here? What caused all of that long-term underperformance and what caused the recent rally? Because only if we can explain that, we might have a chance of figuring out what's going to happen next. Now, Starknet was part of the massive flash crash on the 10th of October. The price temporarily fell by 83%. And that's all due to the levered bets on the Starknet price through the derivatives contract. So there's the spot market where people trade directly the token, and there's the bets on the price. And when there are too many bets on the price, then just a little bit of a price movement on the spot market can lead to cascading liquidations. And that's what we've seen across the market, but Starknet was affected more than the average token. Most altcoins fell quote unquote only by 40 to 50%, but Starknet had a massive correction by more than 80%, so pretty much everybody that was betting on rising prices got wiped out on the 10th of October. The funding rate turned massively negative because all of the longs got liquidated, and so the few shorts that were left, they had to pay the remaining longs quite a bit. The market makers subsequently didn't really buy up that much more of Starknet, but that has changed since the 7th of November, since the beginning of that recent rally. Now the funding rate tends to be positive again, so there are enough longs betting on rising prices. Starknet has always been a token that gets massively manipulated. We have our long-term underperformance, but every now and then we saw a short squeeze that was initiated through the perpetual futures. That's why we see the open interest, so the area here in green, spiking up sometimes to then deflate again. And there is correlation between the spot price, so that's in yellow, and the open interest. So when there is manipulation, then people simply just buy with a lot of leverage on the various centralized exchanges. The leverage then goes down again as all the shorts get liquidated, and then it pops up again, it goes down. So this is a repeating cycle. And on the 10th of October, coincidentally, we already had relatively low open interest. So there was a bit of liquidations, but it wasn't that much of a drop historically speaking, compared to other assets. And so through the price spikes, through the manipulation, all the shorts got liquidated because Starknet tends to underperform long term. Through the flash crash, also most of the longs got liquidated. So there's very little open interest across the board starting from the 10th of October. Now the reason for the long-term underperformance is of course tokenomics. So the number of circulating STRK tokens moved from 719 million all the way up to 2.5 billion, and we continue to see token growth in the future. Let's have a look at the on-chain data, because there's a ported version of STRK on the Ethereum chain. It's got more than 30,000 holders, and the number of buyers and sellers of the token over time is going up. So there's more and more trading activity of Starknet on Ethereum. However, the number of very big investors, the number of whales, is growing less quickly than the number of retail investors. So that's what we see in this chart. On the left side is the number of wallets that have at least 6,000 Starknet tokens. That's roughly $1,000 worth of the token. In the middle, it's a 10x, it's $10,000 worth of the token. On the right, another 10x, so that's now $100,000 worth of the token. All of those wallet cohorts tend to get more and more tokens over time because of the incentive program, because of the token unlocks. But it appears as if the whales are selling that allocation much quicker than all the other wallet cohorts. So this is a token where the smart money, the big money, the whales dumps on the retail investor. So Starknet was a token where the big guys extracted value from the small guys. By the way, if you so far enjoy this content and you don't want to miss future videos, then feel free to subscribe. I publish videos regularly over here. And so the market cap of Starknet tends to hover somewhere between 400 million and 2 billion. Currently we are in the middle at around 800 million. But of course, the token price tends to go down relatively constantly because of the token inflation. So this is the same time window. And the difference between market cap and price is simply just more and more tokens hitting the market. It's the insiders that sell off. Here's the early contributors that are selling, and here's the investors that are selling. Now, there might be a short-term opportunity though, and that's in the relative valuation of Starknet to Bitcoin. So here's again the flash crash. Starknet tended to bleed slightly after that crash. But since the 5th of November, we do see some outperformance of Starknet. There is some volatility. So from top to bottom, we still have our drops of 37%. We see the same right now. But maybe we are short-term oversold. Maybe there is the potential for a bounce. But we can't set our stop loss very, very tightly because we've just consolidated. If we see another leg down, then very likely Starknet can fall quite drastically again. Now really, the US dollar price development of Starknet still very much depends on what the general market is doing. Unfortunately, Bitcoin doesn't look that healthy. The long-term holders continue to sell off Bitcoin. Here's the long-term holder supply net position change. It's going down since Bitcoin hit 20K. And if the long-term holders don't stop their selling, it's going to be very hard for any cryptocurrency to gain in US dollar terms. So just because Starknet might bounce versus Bitcoin, that can simply mean that Bitcoin goes down by 10 or 20%, while Starknet doesn't go down, while Starknet simply just keeps its value. I like to trade based on the 44-day simple moving average. So I've backtested all the moving averages between the 2-day and the 200-day. And whenever we are below that moving average, we tend to fall. Whenever we are above that moving average, we tend to rise. Here is the backtest. If we just bought and held Bitcoin during the time, we would have gotten the return here in white. But when we trade according to the 44-day simple moving average, we tend to outperform quite consistently. And because of that, I am short the crypto market in the last month. So I'm currently making money with this drop. The issue is, of course, we've already come down quite a bit below that moving average. So even if we were to rally, say by 20% from here, we'd still be below the moving average. We'd still be bearish. The optimistic case, in my opinion, is that we just see a consolidation before we actually get another run up. I do not believe in a V-shaped recovery. There's simply too much constant sell pressure by the long-term holders. But if the long-term holders were to stop their selling, we might find a bottom. But again, it takes time until we establish that bottom. This is roughly 1.5 months of data. And so while Starknet might outperform Bitcoin in US dollars, it might have a hard time because again, Bitcoin doesn't look that bullish. By the way, if currently you're losing money in this market and you haven't hedged your positions quickly enough, then feel free to also check out the premium membership. I publish videos on the current market regularly over there. The link is down below, thebitcoinstrader.com. And there's also a capital pool exclusive to the premium members where you can just deploy your money and you're then trading according to that moving average. And so we take advantage of any trend, no matter if it's up or down. And I think that's a better strategy long term. Instead of trying to pick the one winner that might do better than the rest, isn't it easier to just follow the trend, especially when that's backed by data? If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.